So with intermarket analysis, you will very often get clues to where the currency may go by looking at other assets. For example, you get clues to where commodity-based or petro currencies like CAD, the NOK, the RUB may go by just simply looking at crude oil. So we'll pull up oil to give you guys a live example. So we got oil here, and then we're going to pull up. So if you guys can see here, as oil goes up, so does Canadian dollar. They have a heavy correlation with oil. That's going to be one of their biggest exports and import markets. So we see oil going up. We know CAD's going to go up. Inversely, since CAD is in the quote pair, it's going to be the second pair. And its equation, US CAD will be dropping if if oil is going up. So what we can do is we can do our regular analysis on oil, and we can find places to where oil should either continue up or if it should bounce. So oil either drop here, or we can have oil to do a break and a retest, and then possibly a bounce. So if oil does the breakup, the retest, and the bounce, we're going to have USD CAD to drop, pull back, drop. See, these two pairs kind of like looking in the mirror. So there's tons of pairs. Everything has, all these markets are interlinked. There's intermarket analysis. A little bit more of advanced analysis, but I do want to cover it so you guys can kind of start peeling back the onion and start, diving a little deeper into the markets. So there's positive and negative correlations. With positive correlation with what we call risk, it's going to be what we call risk on and risk off in the market. So when we have risk off, when investors are, AKA investors are nervous, let's say the trade war picks up, there's more news with the virus, you'll see that the USD was strengthened. You'll see the safe havens are strengthened, like JPY, the Swiss franc, and the SGD. Now, in times where everybody's optimistic, like today we had the vaccine news released that, they're moving forward on a vaccine. You see the Euro push, the GBP push. You'll see AUD and NZD push as well. So once we start differentiating, making a difference or differentiating these pairs and the segments like that, it's going to help us make determinations on the charts. So if I see back to seeing about the stock market, if I see the stock market rising, I know that I'm not really going to want to be selling most of the time, selling AJ, selling euros. Now, when I do see that there's a spot, there's an opportunity, so I get an opportunity to sell the stock market, I may not necessarily sell. I may not necessarily sell the Dow Jones or the XPX, but I will use this as a guide to say, okay, I don't want to put that much risk on my account, but if I see it breaking this EMA, I may want to take a quick look here at Audi pairs. And we notice they have pretty much kind of the same structure. They're starting to pull back. So basically, I'm waiting for an entry around here. We can wait for the break of the EMA pullback, and then we'll get an entry for the downside for Audi JPY. And we see if we get this thing to run. So we've been looking for this sell for the last couple of days. It looked like it was going to give us one. It's going to be a time where the double top didn't play out. So a lot of times these predictive patterns don't work. So we like to try to go from a perspective of sizing into our trades, and we want our entries based off of psychological levels where we're seeing floor and ceilings, wicks. So you see here we're looking to enter about 74.80. We also have an entry here at 75.72. And we have been taking a few trades trying to look for entries. Not sure. I think some of them still running if they haven't hit stop, but we're looking for trying to get placement. We want to do the opposite of what the herds, what most retail traders are doing. With this style of trading, you do run into stop loss hits, so you do have to, size appropriately or use. I always use the smallest lot size when I first take the trade. As this trade progresses and we get a drop, a pullback, I'll be looking to enter in with a bigger size or get more bang for my buck. So that's just a little quick intro today of kind of some of the things we look at when we trade as far as intermarket analysis, also currency strength. So instead of just going through the charts looking for, these pairs, I can break them up into actual currencies, more like what you would see what a bank trader would do or what a hedge fund manager would do. They're going to be looking at the strengths and the weaknesses. So here I have all the currency pairs, Audi, USD. So we're at a zone here with Audi. Now this thing could continue to push up. No one knows for sure. So we're going to be waiting for a sign of a clear rejection. And my money will be with the bears. Now, for some reason, if we keep pushing up, we get a strong push up and we break this zone, then my money is going to be going with the bulls. I don't care about being right or trying to predict the market. I just want to flow with what the market's doing. Based on some other things we won't dive into today, but if I do see the break, the retest, then from that point, I'll turn it to a bull. So we can take a look here at the strategy we went over. We kind of hit a couple of them these last few weeks, but we're looking into the daily drive, which will be looking at your open and closes for that day. For some reason it's small, so I'm gonna manually draw it. These day markers represent 24 hours of time. So I know when this blue line prints, that's going to be a new day. So I just want to draw a line to where that printed off of. So the rules to the strategy is we want to see where the previous day opened up. We want to wait for price to break that area. come back and retest it, and then we'll take the trade in the direction that the momentum's going. So the price comes down here, pulls back, and it gives us some type of price action pattern, like maybe a wick, a hammer candle, a pin bar. We'll take that trade to the downside. So let me ask, how many people are familiar with the hammer candle, candlestick pattern, the pin bar? Drop a 1 if you're familiar with those candlesticks. If not, I can show you guys what they look like. So if I don't get anything, I'm gonna take that as everybody's familiar with the hammer candle or a pin bar. So that's what we'll be looking for in this area. This will be considered a conservative entry. That means you have a little bit of momentum, you have some flow on your side, you have some confirmations. It's then broke the 50 EMA. It's back in this actual range. So this would be the safest or conservative entry. Personally, I do prefer aggressive entries. So I may short into this momentum if I get enough reasons in this area. I don't have an exact, this is trading off the hour time frame. So I would want to see like an engulfing. I like this nice wick here, this nice tail. If I can get a big candle push, we got about 1 more minute. If this next candle opens up and we start driving down, I may go ahead and take this trade, allowing me to have a stop loss right above here, which is probably about a 30 pip, 40 pip stop loss. So that's one method that, you know, I would use off of the hour time frame. Looking at a daily perspective, the reasoning for taking the trade would be market came up, it rejected. Market came back up to this area, it rejected. Markets tried to come up, it rejected a little sooner. It got pushed again on this news that we had from the vaccine. And it's back in this area. So price is going to do something here. It's going to either push down or it's going to break above, retest, and we can get an entry in either way. So I have a daily, what I would call is a daily bias. I don't want to really per se buy into a resistance zone. So my choice of entry is going to be looking for something to the downside. I'm going to work my way down the time frames and just wait for an actual entry for a sell. We look here, we have a railroad candle. This candle railroaded or covered the previous bullish action, showing a potential momentum switch. We're now getting to the 50-day EMA. If we can get a break of this, we may be off to the races and get a nice push down. So we can clear these bodies. We can place an entry right about here. We may actually go ahead and be able to take this trade with a small lot position live on the call. We have this entry here. Stop loss about here. So entry. About a 25, 30 pip stop. And we'll look to at least get double what we're risking. So we'll be looking to get back down to this formation here. It's about 30 pips. So that's a 1-to-1 first target. But we want to get double our money. So we'll be looking to get out this trade probably right around here, right about a psychological level, which would be 7580. So we're looking at 40, right about 60 pips, 2-to-1. If this thing does keep pushing down. So that's the kind of process I'm kind of using to determine the trades. Do I got any questions so far over some of the things we're looking at?
Can you go over the hammer thing that you were mentioning? Because I'm not familiar with that.
No problem. Yeah. So let's find us a hammer candle. You know what's cool? I don't know how good it is, but we're gonna try it out.
I
Trading
missed
View,
it.
they have a candlestick here. If you go to
I missed it.
indicators, oh, I'm sorry, it
I
was.
said I missed it.
Oh, we haven't went over. We haven't covered it yet. You haven't missed it.
Is she posted? Is she posted?
No, ma'am, not yet.
Yeah, but is it she who posted?
Was it the hammer candle?
It's
No,
buying, but you have to wait for the pullback.
exactly. So we're waiting to see about a pullback, or we're waiting to see which way we're gonna take the market. But I'm gonna just show what a hammer candle looks like, which will be a signal that we make and take it a sell. Or if we get a hammer candle, like I was gonna show you this indicator, but it looks like it may be printing a bullish hammer candle now. So that's a 30-minute. Let's go to a 15, and I can show you one of the candlesticks. So Eve, this one right here would be a hammer candle. Find something I can draw with. That'd be this one here. So it'd be that red candle with a long wick and a bigger body. Wick's probably gonna be about half the size of the body, and that's gonna signal momentum. So the bears came in, the bulls stopped the momentum and pushed the price up. That's gonna be kind of alert that price can continue upward. This is a 15-minute time frame, so as we were speaking earlier, they're not as powerful as as much momentum as say if we seen one on the hour chart or the 4-hour chart. Let's see if we find one here. It's not going to be as much of a pip difference or distance on, like, say, the 15-minute. Doesn't mean it won't be a good entry signal, but you don't want to, go for the home run if you see it on 15. If you see it on, like, the hour or something, it has a little bit more meaning. And I do want to try this out real quick. So they have hammer candles. See what it highlights with this. I have a new feature in Trading View. It's not highlighting anything. Okay, so it gave us one way down here at the bottom. So that's an exact hammer right there. That's a nice example. Have the long wick, the body pretty full body that signals bullish momentum. See it follow through and it went pretty bullish. So that'll be our hammer candle, giving us signals to, if it's a hammer candle with the green body, signaling bulls. Opposite, if you see one that's red, it's going to be signaling that the momentum is over, or the bulls, either the bulls or the bears is trying to take control of that area. So back to our example on the chart. This may print out to something kind of similar to a bull, to a bearish hammer. Well, no, it didn't when we zoomed in. It gave us pretty much like a doji, which is a reversal signal as well. It's showing that the momentum is stalling to the upside. And as you see, we're starting to get nice prints of downside momentum. And we're on the higher time frames and we're just working our way down. The market is fractal, so what happens on the smaller time frames work their way up to the higher time frames. So this 1 hour candle, it's going to be 4 of these 1 hour candles is going to total up and print off or decide how this candle looks. So we notice with the 1 hour scope, the 4 hours were choppy or they're in a range, i.e. we get a doji or indecision candle on the 4 hour, kind of going up and down, what you would see on the 1 hour time frame. So at this point, as I said, I see momentum is starting to potentially shift, or it could just be considered a pullback. I want to see where do I want to get into this trade and which direction do I want to go. So we want to follow the trend. There's different styles. Most traders would like to follow the trend, but you can be contrarian. And this is where your strategy or your trading plan comes into work. So this doesn't fit my criteria yet. I am at the top of the Bollinger Band. I am starting to see price action patterns, but this is all consolidation currently. It's locked in this range. So I want to see price break out of this area from one side or the other. Doesn't matter which side. If I get a break above there, the bulls are back in control. If I get a break below, I want to be a bear. So we have this trade set up and we're just going to wait. Stay patient and wait for the price to break. We're looking to take this trade. But now that I know, going back to intermarket analysis, now that I know AJ has a potential of being in a range, I also know we go back to here and see which pairs are partners with JPY, which pairs run hand to hand. They're on the same team. So I got USD, CHF. So I can go to ADI, USD. It's going to be pretty much the same type of area. Set the top of the zone, pull back. We have momentum. As soon as we get to this area, big red candle. Actually, almost taking out 3 days of bullish in that one candle. Try to push up, rejection, wicks. We're getting a push up. So it's giving me more leaning that maybe we'll get another big candle. You know, price likes to repeat itself. If not, the same plan that we have on AJ, we're going to take that over to AUD, AU. Zoom back into my daily or to my 1 hour. I'm going to mark off my zones again. You can use wicks, but I prefer bodies because you can kind of see the wicks visually. The bodies allow me to get a quicker entry, but it comes back to preference. You can try either way you want, and whichever gives you most consistency, I would use that. But body is going to be above this Bollinger Band, so we get a push up, pull back. We'll start the continuation to the upside. On the latter side, we get underneath this consolidation. drop down pullback. Look to take that trade. So 1 hour scope, first target will be these. It's going to be the previous day's low. So let me get you to drop a one. Would you guys agree that if these two, between this square, is going to show the whole, all of yesterday's data? Would you guys agree that this is the lowest point that it went yesterday? Just drop a one. I just want to make sure everybody's following along. If you can, it's pretty important when it comes to momentum because this area represents something. So I hope you guys are silent because you're learning something. So I'm going to take it as that. We're going to look at, this is yesterday's low, yesterday's high. We're right now starting to break yesterday's high. We did get a rejection though, indicating something. Somebody's sitting here in this zone selling. Now I'll throw one more element. So we have, all on the screen right now, we have today's open, where the market opened. We have yesterday's highest point. We have yesterday's lowest point. And we can also find the high of this week. So today is going to be Wednesday going into Thursday, Tuesday, Monday, Sunday. So far the high of the week. We're getting up close to the high of the week. So you guys know to break, or you will start hearing me say to break areas of significance, or these zones, these key zones. You're going to need a big candle. And I'll show you guys on the chart. So we look at the high of this week. We can see that when it comes up here, there's a little bit of resistance. There's resistance when it comes to this high. In the past, this high also played as a floor. Come here, it's rejecting, it's bouncing. You see a nice wick here. We can even go up a time frame and look at last week's data to see how relevant this line is. Bam, it's another strong bounce down. We had a lot of momentum coming up and it flipped it. And if you see, it's going to take a big candle to break through that. Big candle to break through that. So we're going to need it. Looks like it's going to need a lot more momentum to push through this versus the downside bias. So this is even more looking up and shaping up for me to want to align with the bears. It looks like the bears are trying to take control. They don't have it yet, but they're trying to establish control in this market. And you see it starting to drop. So this is a little introduction into price action, some of the things I look at to determine market flow and direction. No one's going to be 100%, but the goal is to get everybody to start executing trades, to not be so nervous and leery about having to have the perfect entry, to kind of finding the flow, and to know, hey, if I was seeing something on my 30-minute time frame, let's say, it gave me some type of pattern, but let's say you got in here and you had your stop loss up here at this yellow line. So a lot of traders, newer traders I see, or even veteran traders, they're stuck in this mindset of they don't like to see any drawdown, which is understandable. But it's easy for us to see this after it happens. But if we were to take a trade here, there's no way that we're going to know that the price is going to bounce directly like this. So we got in, and now we're probably still in a couple of pips. Well, our entry would have been here. So we're just now like at a break-even trade. It has been running for about a day. But what we're doing is we're giving our trade time to run. So instead of taking, let's see, 71.97, instead of just taking 50 pips, I'm going to potentially risk that 50 pips to see if this market will do a wave. Came back and gave us a drop, a little bit of a correction. And let's see if it's going to go for 150 pips, 200 pips. What that allows is for your winners to win, for them to run, and you're not so worried about what we call spikes in the market. So on these lower time frames, you have a lot of spikes. The 30-minute, as you can see, is a little bit more fluid. There's not many tails on this particular chart. If we drop down here to, let's say, the 5-minute or the 15-minute, so we can find some spikes. You have a lot more poke outs. Not seeing just too good of representation, but you have a lot more of these spikes that's ending the momentum, and then it goes in the direction. So sometimes you may get a drop, you start getting price action patterns, and then you get a push or retrace. And most people are looking for it to say this is, if just looking at it the naked eye, this is a drop, and then a retrace was about 50%. So that's a significant area with the Fibonacci is the 50% retracement. But you see how they like to, and this is just an example, they like to weed out the people that were correct. So they'll hit your stops. If you had your stop too tight, we'll pretend like that was a longer spike, and then they take it in your direction. And they keep taking it in your direction. So this is a smaller time frame, but these are the runs that we're trying to catch. So we would have got in, somewhere around here. Once we see the price starting to, even if we use an indicator, this is a 20-day EMA. We've seen it cross. It's a reason to get out the trade. If we were trading on the 15-minute. But usually we're going to have more time with the higher the time frames, the more time we have to make decisions. So yeah, that's AU. After all this bullish momentum, I'd rather wait for the 30-minute to give me a signal. So I can wait for it to, I consider this a leg. As we start diving into things like Elliott waves, M's, W's, V's, and A's, You have half of the direction because the market always moves in waves. You have the downside wave, you have the pullback or the upside wave. So leg A, leg B. So I see leg A did a nice drop. Leg B retraced or almost recovered, corrected that whole move. Didn't quite do a full complete V. We started getting rejection here. And we would start seeing a supply zone right in this area. And this is how price likes to move. They initiate the selling program, and then they come back and retest the supply zones. So that's all trading is really, or price is just going from supply and trying to meet the demand, or the demand trying to meet the supply. So a lot of times you guys will hear me be heavy into concepts because it gives you an understanding of the Evans flow in the market. So supply met a demand down here. So demand takes the price up. At this point, this price point, there's a new supply or there's new sellers, and it's looking to go ahead and push it down until it meets a new demand zone. So that's a little introduction to supply and demand. You can see this on the chart is when you see these big, nice candles coming out of supply, support and resistance zones. You'll see a huge candle that breaks a level. So some of my more veteran traders may know it as an order block. This also could be a supply and demand zone, but typically you can start looking for that. You'll look for an area where there's a big candle that pushed down and it starts the trend. And if you see the trend reverse and you want to know, hey, where would this up move? I see this big, nice downside move. Where would this up move stop? Well, if it's the first time it came down, you can look for it to come back and retest this big candle, this order block. Once it retests it, this is where we're going to be looking for an entry. So I'm throwing a couple of different elements at you, but this is an entry based off of supply and demand. This is a pretty good strategy. So far, we kind of just dove into some top-down analysis, building a bias of which direction we may think the trade may be. And then we kind of zoomed in and did some extra analysis studies of things like supply and demand. What is supply and demand? So to nail in or to kind of bring everything full circle, I'll tell you guys about the supply and demand concept. So we'll look at, say you're a owner of a convenience store. For some odd reason, the pandemic stopped your supply. It stopped the bottles of water from coming to your city. You're the only store with cases of water left. That's going to start your supply, for people to start taking your supply. The number of bottles of water you have is going to start dropping. As it gets lower and lower, now as a business owner, you know that it's a rarity. This price is compared to everywhere else, the fact that there is no water, or if there is a little bit of water, the price of that bottle of water is going to start going up. Similar to like the iPhone when it's first released. Let's say physical metals, the less diamonds there are, the more the price. So as you get less, then now you get, this side is going to be you, the business owner, increasing the price of water. You still have a couple of cases, or you have a stock of the water. Everybody's kind of frantic. The price of the water is going up, going up, going up. We get back up here to this area where there's supply. The warehouse calls and say, hey, we have more water coming into the town. Nobody worry. Slowly, we're going to start giving it to other locations. At this point, everybody's full, no one's thirsty anymore. Everybody know the water's gonna come back. There's signs. Price kind of dips a little bit because you have competition there. In the trading world, this is gonna be profit taking. Say, hey, we ran the price up. Let's take a little money off the top. The big boys do that, and the price comes down a little bit. Now, the bottles of water still hasn't gotten to the city, and refrigerators are empty of bottles of water. So they don't care what price at this time. They just want to follow the phrase or the craze of I need a bottle of water. Even though I know that water's coming next week, I have to have some water. Kind of like the toilet paper issue we had with Corona. Everybody bought paper. Prices went up. Bam, you get a last rash. Everybody's panicking, buying tissue at crazy amounts or water bottles at crazy amounts. And bam, the supply comes back in. And now you're going to see other stores have it. Price going to drop. Everybody's, okay, you have it at $10 a bottle of water. Now that I got my stock in, I'm going to sell them at $9. Now that I have my stock in, I'm selling at $8. So far and so on until we get back to, and I don't want to throw nobody off, but we're looking for what we call a fair value. So in a sense, it's going to take us a couple times of us going through that, or you guys can kind of self-study, look up supply and demand, basic economics, because this is what it's printing the candles. So if you guys want an edge in the market or kind of understand even on a deeper level these candlesticks, dive into supply and demand and auction market theory. What I just explained is an auction market. We're really in a live auction. There's bidders, ask and hit the bid. So that's how you kind of start directing with using inner market analysis, using an understanding of the concept of supply and demand. The big boys, last thing I add on that is if I'm a bank or a hedge fund, I always want to look for, if I want to sell, I want a more expensive price. They don't sell at the bottom. They buy while us retail traders are looking for confirmation after confirmation, and we're waiting so long for price to give us a sign to get in. The big boys are getting ready to buy into our selling so they can get a more expensive price to sell their actual supply. So you may see a big boy come in here and sell whatever or make the transition he's trying to make. So it looks like we just had some type of news. Alerts going crazy. So close out some of these alerts. Check to see what news that was. Again, was that push? Sure. Anybody have an economic calendar? It's not showing any pass. So either way, though, it's looking like they may want to continue to push the market up. So we're just gonna wait for our break. Pull back and then we'll become a bear, bull. breaks this zone. Yeah, honestly, I don't really even see it still breaking. I think it's gonna come up with probably about this area where it's at and drop off. So I'm thinking some type of news came in, causing this thing to push. So we'll go for probably about another 15, maybe 20 minutes. What we'll do now is this is our price action. A few concepts to start learning and diving into, and we'll look at a strategy here. Yesterday. Yeah, JPY just had news. It looks like they had PPI. So we'll see if bulls can push it on up. So especially with trading on these smaller time frames, first step is always going to be to check your news. See how this actually does. So we'll see what it gives us. We get a nice wick. It's definitely going to be selling here. We get a push above. I'm gonna wait for the pullback, and I'll be looking to buy. We got about 10 more minutes in this candle, and then we can actually take a trade. A little scalping strategy. Got there's a preview of this on the YouTube channel, and I'll show you all the ways to set this up. But what we're gonna look for is this red line represents sellers, the blue line represents buyers. If the red line is above the 25 mark, we'll be looking for an entry to sell as long as the momentum is beneath 100, and also it's going to be beneath the SARs, the parabolic SARs. So first example here, we have it above 25, we have it beneath the SARs. We would have took an entry here. Stop loss is going to be about 10 to 15 pips. Or excuse me, you can even do I would say a 5 to 12 pip stop. And then you're going to be looking for anywhere from 15 to 20 pips. This one didn't give us the full pips. It gave us about 10 before we got a big candle. We would have went ahead and just took profit, about 5 pips, and wait for it to set up again. So it's a pretty nifty scalping strategy. If anybody prefers or wants to scalp, here's a buy using this technique. See, it goes over the 25. And we got a nice push. No pullback at all, but you got about 35 pips. So in a range of about, look from anywhere, the rules is 15 to 25 pips. You see here, as soon as it hit about 27 pips, it pulled back. We would have been out of that trade. Good buy opportunity. Here's another sell directly afterwards. Pushed up beneath the SARS. This one only went for about 10 pips. So when I start seeing like the bears, it's just showing that this is a, should have explained it at first. So when we have an uptrend market, we mainly more want to look at does work going counter trend or sales or buys, depending no matter the market. But we have an uptrend, we want to more stay looking for buys when we see that the market's been going up. So to be on the safe side, you would, even if it gives us a sell, you only want to be looking for buys in a trending market. So there's another example. See if they follow the criteria. So that would have gave us a loss on this example. So it's good we get to see, nothing's 100%, and they even gave us a loss here. But the first indication here, that was a win. That was about 25, 30 pips. Stop loss is always going to be about 12 pips at the most. So it's going to give you the opportunity to get a 2-to-1. If you're just doing some trading throughout the day and you want a quick, easy kind of go-to strategy, this would be something you guys can use. ADX. And I'll reshare this video in the group. See if we get any trades we can take now using this strategy. So this may be setting up. We're going to wait for it to poke back above 25. We have the parabolic SAR starting to go down. So it'll probably be in 5 minutes. We can take a scalp for about 20 pips. Get this to push down. We'll check back with CAU. Nice wick. News push. So some pairs you guys want to watch for tonight will be AJ, AU. We see EA could be setting up for the ADX strategy. And this may be a nice sell here on AJ. Big nice wick. Zone we've been eyeing. So to end off the session at 7647, look for a sell. start looking, don't take the sell, but once you see the break, wait for it to pull back. You can put a alert here and then take the sell to the downside. Look to get to stop loss about 30 pips. Risk to reward, look for about 60 pips out of this trade. Before we close out the session though, anything you guys want to dive into? Any questions, pairs? So going once, going twice. I hope y'all caught, once again, hope y'all caught some value, and we'll do it again tomorrow. We'll keep hitting, we'll hit a couple more strategies.
Thank you.
No, thank you for joining us.